Today, January 16, we detected unusual options activity on EWJ. This is an ETF that tracks Japanese stocks in the stock market in Japan. As you can see, the ETF made a new high on the last trading day, Friday, January 12. So in this video, we will analyze these unusual options to determine whether or not there is a good chance this ETF will continue to make higher highs. If you're not familiar with the recent news of what's going on in Japan, markets in Japan are hitting multi-decade highs. You can see that it's been almost 34 years since they set a record-breaking new highs for the first time since February 1990. So it will be very interesting to see whether or not these unusual options can predict this type of macroeconomic change in the markets, because this ETF, EWJ, includes many companies in Japan. As you can see here, the iShares Japan ETF, the holdings includes Toyota, Sony, Mitsubishi, over 200 companies, Nintendo. So let's get to the data to find out what could potentially happen. As you can see from the options time and sales tape, we have 13,744 unusual options for the March 15 68 strike calls and the 70 strike calls. Now notice that this was done at 11:58 13 seconds, but there was also another one as well, a third one. This 67 strike calls for the February 16th. Okay, this was 10,995. Also notice here, 4 minutes prior hand, same trade right here. Okay, so these are all being done together. Okay, so let's take a look at the chain to find out what is happening here. Okay, so let's take a look at the February's first. You can see here the 67 strike calls. We have 21,000 open interest. That's greater than the volume today. So we think that there's a higher chance that this is a closing trade. They are taking profits on these 67 strike calls and rolling them to the March. Okay, because these are not opening trades. For the March, you can see here the 68 strike calls and the 70 strike calls. Open interest for both of these strikes are much less than 18,000. Now 18,000 is approximately the amount if we were to add this 13,000 and this 4,000. So 13,744 plus 4,734. So 18,478. Okay. So notice here that for these 70 strikes, this is colored green. Okay. Most people would think that they bought these 70 strike calls, but that's not what we think. We think they sold the 70 strike calls and they bought the 68 strike calls. Okay. So this is an example of when sometimes the color does not necessarily represent a buy. Okay. We can see that they paid $125 and they sold for $60. So approximately $65 per trade. Okay. 18,400 about. It's about 1.19 million. Okay. So because this is an ETF, where the holdings include many different stocks, a $1.1 million trade on an ETF does not meet our threshold for a high probability of profit trade for ETFs. Typically, if it was a smaller cap or mid cap company, yes, a $1 million trade is quite meaningful, and we would have shared that with our members only, because those are higher probability of profit trades. Okay. If you are interested in higher probability of profit trades, not like this one, because this is an ETF, there's risk involved, because this is very much also dependent on multiple companies and macro events. You can go to our website, put a link at the top here, and let's analyze this this call spread. Okay, so what they did, they bought for the 68 strike calls and they sold the 70 strike calls, and we said they were paid about $65 per trade. And so you can see that this is their vertical call spread here. This is the profit loss diagram to analyze the trade. We're currently trading right here at this price level. That's the x-axis here. The y-axis is the profit line. Anything above this is profit, anything below is a loss. So purple and blue lines, if they are below, this is a loss. If it's above, this is a gain. So you can see here, as the stock price moves up, this becomes a profitable trade. If it goes down, it becomes a loss. So they are risking about $65 per trade to make potentially, you can see max profit is about 135. Okay, so it's a risk to reward ratio about 1 to 2. Okay, so this is how you can use options to leverage and make more than 100%. Okay, but there is higher risk involved with trading options. You could potentially lose 100%. Okay, so that's why it's very important to have very good risk to reward ratios, so that if you make many of these types of trades, you don't necessarily have to be right all the time. As long as you are right and you make more when you're right, then you will be net profitable. So that is how we trade. We use the data, we use the analysis to find out what the wealthy traders are doing, and we develop option strategies and share that with our members only. If you are interested in this, make sure to go to our website. Put a link here, comment below on whether or not you think EWJ will continue to move higher, because based on this analysis, it will. There's a high chance it will. Please smash the like button and have a great day.